Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Friday, December 5th. It's been a long week, but it's also been a very fast week. And the first week of December trading is going to be ending today as we get into the Market Open. We got a bunch of headlines this morning. Number one is PCE for September, which is the Fed's preferred measure of inflation. Usually is out at 8:30 a.m. on the days that PCE is supposed to come out. The government was shut down during September, so it's coming out at 10 a.m. today. So in about an hour, we're going to get some details on what the PCE for September looks like. I don't know how much of an impact it's going to have in terms of how the market's thinking of inflation. Usually PCE does have an impact, but this is 3 months old data. So we're going to have to see if the market does react to that when it comes out at 10 a.m. The Fed futures probabilities right now is 87.2. It was 89 yesterday. So that is an important piece of data, and we'll see what happens when that comes out. The other big headline, obviously, Netflix buying Warner Brothers Discovery for $72 billion. We've been talking about this all week. It has definitely caught my attention. If Netflix were to be able to acquire them, actually it's 82.7 billion, equity value of 72 billion. There's a lot to break down and dive into and see kind of what this means for the overall streaming landscape. I know Netflix stock is down in the pre-markets because obviously if you're going to be spending $80 billion, Street's not going to be the happiest about it. But I'm not buying the dip yet. I need to analyze the debt profile, how I think Netflix is going to navigate the debt. If you don't want to get that deep into the details and you just think Netflix is going to be a monopoly, I mean, maybe this is a buy. The other problem is the regulatory hurdle that I think Netflix might face. Now, granted, I don't think they did this deal if they didn't think they would be able to get the job done. And there's some unique ways that they basically argued that they would not have a monopoly. Because if you look at the internet, YouTube has more watch time than Netflix. So like their argument is, hey, we're not competing with the streamers. We're competing with like the tech companies like YouTube and Google that have this like massive audience online, or Twitch with Amazon. So I think there's some nuance to how you make the competition argument. But my gut feeling tells me this is good for Netflix. Like, and we'll talk a lot more about it in a bit, but I really do think the types of content they're getting and the IP that they will have forever on that platform in the subscriber additions, which they should be adding 40, 50 million subscribers, should be a big deal. So that is a headline that we will talk about and get into. It seems like that is going to be relatively important. We have some NVIDIA chip headlines as well that we'll get into. Speaking of NVIDIA, last night, the event that I was at, because I was not on the market close, was an event for Palantir. It was their Paragon event. This is kind of like AIPCon, but a smaller version of it. It's a customer-oriented event where the customers come, they explain what they're doing, and this one had less customers than AIPCon. It's kind of like also like an end-of-year celebration type of party that they do in December. And so you had Mr. Alex Karp there, and he gave a small speech, and then you had some customer presentations. The reason I went as well is to do some interviews with some customers, and I got to interview the head of the NVIDIA deal along with the head of the Palantir NVIDIA collaboration. So the two people that were integral to setting up the NVIDIA Palantir collaboration, I got to interview them, and that video will come out next week. I have a lot to say about the NVIDIA person that I met. Basically, Jensen has 30 direct reports. I met one of them last night, and we talked for like 30 minutes, and he's like tight with Jensen, like every single day he's talking to Jensen. And it was really cool to pick his brain about Jensen and like just how Jensen is navigating this whole, $4.5 trillion company thing. So we'll talk more about that. But he was an awesome guy. His name was Justin. Interview will be out with him next week. And that's why I was gone for the market close yesterday. So we'll talk all about that and go deeper into it. Markets are red in the pre. Not sure why. We were green like 30 minutes ago. A little bit of a drop, nothing crazy. S&P down 0.09%. It also is a Friday. You've got options expiring first Friday of December, so you might have a little bit of wonky option expiration stuff that happens. NVIDIA right there down about 0.11%. Overall, the week has been green. I mean, S&P 684, remember all-time high 689. We are very close to that all-time high, so if we can even hold the 680 level going into next week for December, I think that would be good. Yeah, PCE is going to be at 10 a.m. Oh, algo stop PCE was coming. Well, see, I saw a screenshot. This is from yesterday. Someone posted this. This was 12 hours ago. They posted this, that PCE was coming at 10. So I feel like the market has had 12 hours to know that PCE is not going to be coming out at the usual time it comes out. But yeah, maybe the delay is causing a little bit of pain there. And so we'll see when that one comes out. All right, so 10 a.m. We'll see what we get with PCE, and then we will keep going from there. Again, thank you everybody for being here. Let's get into it. I think let's start off with Netflix. This is a big one, and I know a lot of us probably aren't investors in Netflix or Warner Brothers, but man, we have not seen an acquisition of this size in a very, very, very long time, and it is officially happening here today. Yes, the Mexico president is also meeting Trump and Carney in DC, so the Canadian Prime Minister will be with Trump and the Mexico president. Oh, the SoFi dilution thing. Look, I looked at it last night. I don't think it's that big of a deal. I know a lot of people are pissed off because of what SoFi is doing with it. Look, it is a little bit weird timing, especially before the holidays. People are kind of upset, but like stock's down 5%. Stock was where it was at last week. I don't think it's that big of a deal. I am trusting, I'll just talk about SoFi real quick before we get into Netflix. I am trusting, well, okay, SoFi is now 7% now. I would trust that management understands why they're diluting. A lot of people have this theory that, oh, they should have waited until after the S&P 500 because then they would have got a better price. They would have had less dilution to raise the same amount of capital. It was about 1.5 billion. I don't know, and I don't think SoFi knows if they're definitely going to get into the S&P, which I'll be live today. The S&P announcement is at 5:15 p.m. Eastern. So I think Steve will join me and we'll wait and see if SoFi ends up getting announced. But I don't think this was contingent on the S&P announcement. I think they just really needed the money to do something. What are they doing? I don't know. One would argue it has to be an acquisition, but a lot of people are saying it's not an acquisition. So is it paying off some of the convertible notes? Maybe. It is a bit weird because at the fireside chat, they said they didn't really need capital. The day of earnings 80 days ago, they said they didn't need capital. And then, after hours, they diluted. So yeah, it's weird, but this is where you've got to trust that Noto actually knows what he's doing. Not to mention Noto has a lot of money that's waiting for him at $45 and even at $35. So the dilution stops the stock theoretically from easily getting to those tranches. He only has a couple months left to really sustain those price targets to be able to get, I think it's like $500 million he would unlock. So I would imagine he thinks this thing that they're going to do with the 1.5 billion is accretive, and they know better than me, but I don't think it's that big of a deal. I don't know if it's that big. Like, I wouldn't freak out if I'm heavy into SoFi. Is it annoying for SoFi investors? Yes. I mean, this is the second time they've done last dilution was what, 1.2 or 999 million, something like that. This one is 1.5. It is kind of weird to raise that much money in the span of 5 months, and they haven't announced a major acquisition yet. So I am personally confused why they're doing it. Do I think it's the end of SoFi? No, I don't think it's the end of the world or anything like crazy like that. But I can understand why people are annoyed, and I get it. I wouldn't be buying the dip. I mean, like for a dip buy, but this thing was at 23 2 weeks ago. So like for a dip buy, this thing needs to get down a lot more to get more excited. Now, if you think they're going to get into the S&P or something, then maybe you take a swing at it. But yeah, the only analysis I can really provide here, because no one knows what the hell they're doing this for, is that you've got to trust that management has an idea of how the dilution is going to play out and why they want to do it specifically at these prices. Also, Goldman is underwriting it, and Noto's ties to Goldman. So I would imagine he wanted an underwriter that could effectively do this capital raise to get to the next step of what they want to do. But SoFi is in the midst of trying to figure out how do they gain massive operating leverage in the business? How do they actually use that operating leverage to turn into shareholder returns? The stock has already done very well this year. And then how can this dilution be accretive? And we're going to see if this dilution ends up actually doing something meaningful. I guess the only other bear case is that, yeah, they have some bad loans and they have a lot more delinquencies than expected, so they need to raise more cap. I really doubt it given SoFi's underwriting quality, but I guess we're going to find out over the coming months why they ended up doing this dilution. Okay, Netflix, what is going on here? So here's a quote from Ted Sarandos, CEO of Netflix. Our mission has always been to entertain the world by combining Warner Bros.' incredible library of shows and movies, from timeless classics like Casablanca and Citizen Kane, by the way, both incredible movies. If you haven't watched Casablanca or Citizen Kane, what are you doing? To modern favorites like Harry Potter and Friends, with our culture-defining titles like Stranger Things, K-pop, Demon Hunters, and Squid Game. We'll be able to do that even better. Together, we can give audiences more of what they love and help define the next century of storytelling. He goes on to continue, the acquisition will improve our offering and accelerate our business for decades to come. And I think they're right. Like, for the next decades, this is going to be a content library that is very rich. for Netflix. Warner Bros. Has defined entertainment for more than a century and continues to do so with phenomenal creative executives and production capabilities. With their global reach and proven business model, we can introduce a broader audience to the worlds they create, giving our members more options, attracting more fans to our best-in-class streaming service, and strengthening the entire industry for entertainment and creating more value for shareholders. I think this is a good deal, man. Like, one of the reasons I subscribed to HBO Max a while ago was just because they have way better intellectual property than Netflix. You have all the DC movies. When it comes to Batman, I'll finally be able to watch The Dark Knight whenever I want on Netflix. Friends, that in and of itself is massive. All the Harry Potter, that's massive. Got Silicon Valley, Big Bang Theory. I mean, just so many classic shows that people love are now going to Netflix. The question is the unit economics on this deal. And the bear case to this is Netflix gave an all cash offer last night, and they upped it from whatever Paramount offered. And they said, we'll do, or it's about 85% of its cash, and like it's $23 cash per WBD stock, and then $4 a share of Netflix stock. Now, Warner Brothers is not necessarily pumping. It's up 3%, but it's not at the acquisition price because I think a lot of people are still wondering, will this go through? So there is a little bit of an arbitrage there. The bear case here is that Netflix one could argue Netflix became desperate to offer this much money. And the reason they might be becoming desperate, Netflix right here down 3.5%, is because their actual business on an advertising and subscriber side is slowing. Remember, they don't report subscribers anymore. And they are realizing that there's not that many K-pop Demon Hunters and Squid Games for them to be able to create over the next 5 years to meaningfully get that next surge of subscribers, which inevitably means they're not going to get that next surge of revenue. And Netflix trades at a multiple that, quite frankly, the rest of the media entertainment business cannot believe. And I missed Netflix for the past 10 years because I couldn't believe why they trade at this multiple, because I was like, they're not a tech company, but they're a media company. Like, yes, they use algorithms to help you recommend what content you want, but they have to buy the content to be able to get it on the platform. So there's a lot of cogs there just in order to make it happen. But Netflix trades at a multiple, and I think it's because it's a best-in-class streaming service. Question is, how do they protect that multiple going into the next decade? And I think to protect it, you need the best. You have to give everyone a reason to never leave, and more content might end up being that reason. So let's get a little bit more analysis right here. But I do think it's a big deal. I'm not buying the Netflix dip yet, but I am heavily exploring it because if this thing goes on sale and they have a monopoly on streaming, essentially, it does feel a bit more attractive.
I do think, I don't know, do you watch Stranger Things, Andrew?
I have, yes.
In some ways, it sort of feels like we're living in the upside down. You think about how this process has been playing out, and Paramount was out there saying, we're the only ones that can buy this asset. We have this unique relationship with the president. Nobody else can get approved. And they've been the ones complaining that the process is not fair or quote unquote rigged. That seems sort of strange and sort of feels like sour grapes now. It really feels like, honestly, it feels like they got outbid because this is the north of $30 bid in total when you think about
There is a breakup fee as well. So if the regulators say this is not possible, Netflix has to basically pay $6 billion, just like Adobe had to pay $1 billion to Figma. So Netflix is taking on a $6 billion risk. That's not a joke. I mean, so someone in the Netflix C-suite really thinks that they're not going to have an issue with the FTC to get this done because, I mean, if they do, Warner Brothers is going to get a free $6 billion.
Discovery piece. This is the $30 plus bid that, Malone's been talking to Faber about and that we've heard multiple times from Zaslav. This is that type of huge number. Look, the math is going to hurt Netflix for a while. There's no doubt this isn't expensive. I mean, they think this is accretive in year 2. Obviously, we have to understand how they get there. But, maybe it's just that there's so much stuff that they can turbocharge. But this is a huge price, and I don't see how Paramount can top this bid. This seems like a number that is just too big.
We're talking about year 2. How quickly do we get to even year 1, given the regulatory review and likely fight that is going to go on? You have to imagine, given all of the noise we've already heard from Paramount about its views about a potential transaction of this sort and how they believe this is going to be anti-competitive, that they will be out there, as other companies might be, going to the Justice Department seeking to block this deal.
Look, I'm sure there's going to be lots of, attacks on this, and there's no doubt this is not a quick to close. I was looking at the math last night, Andrew, and if you look at, let's just say for a second, the market is only streaming, professional streaming. So we're going to exclude YouTube. We're going to exclude all of linear TV. Now, both of those, in 2025, both of those, it's to exclude those, that sounds sort of insane. But if you just looked at streaming today, ex YouTube, Netflix represents 24% of TV time spent. With HBO Max, that 24 goes to 28. So it's not like you're going from 24 to 50 or from 50 to 75. Like, you're still in that quarter of the industry, when you look at it like that. And if you put it into the larger context of with YouTube, with ABC and ESPN and all the channels that they're really competing with on a TV for time spent, Netflix plus HBO is still under 10%, smaller than YouTube, smaller than Disney, actually, when you look at the entire Walt Disney Company. And so it all depends on how you define the market, for sure. And I know there's going to be a tremendous amount of attacks on this. It is interesting, though. You would think movie theaters are one of the ones that are going to be the most aggressive in trying to attack this. But look at what just happened in the last few weeks. Adam Aaron, who has hated Netflix, came out and was gushing about Netflix and their new relationship and new partnership with Netflix, and how they're going to play Stranger Things in movie theaters, I believe on New Year's Eve, a special presentation. And so, I think Netflix has done an incredible job of sort of bringing, getting the industry behind them over the course of the last year. And it's going to make it that much harder to fight this.
Rich, I don't know if you do long form. Andrew likes long form. I don't know why, or maybe Faber should, because he's been more involved with Time Warner crap over the years than any, all the way back to Jerry Levin and everything else. But I'm just thinking about all the stops and starts along the way for these unbelievably venerable assets. And I'm just going back to AT&T wanted them more than anything in the world till they got them. And then it's like, what are we going to do with them? And then David wanted them, Zaslav wanted them more than anything in the world. And then he got them, and it ended up kind of being a cleanup of sorts. Do we say, David, when we were talking about the legacy, that this is amazing that he's able to get $30 finally? Because a couple of years ago, I think he would have thought that would not have been great. But you look at the entire media landscape, what Sherry Redstone ended up with. Comcast is at $27, down from $65. The landscape.
Disney's lower than a decade ago, Joe.
Disney's lower than a decade. It's at $100 a share. So what do we say about that? He got $30. Do we say it's a huge triumph and that he bought it and it's amazing? Or do we say, it's just sort of the best you could do given the circumstances? How do you characterize?
Look,
You're asking me?
I'm asking you.
Oh, sorry. Rich, I'm being asked. Contextually in this moment, you have to give him a lot of credit for getting to this place.
Okay, but
look, I think he does deserve a lot of credit because he's been throwing around Warner Brothers many, many times in many different directions. The question is this accretive to Netflix? I mean, honestly, no one even cares about the impact of Warner Brothers anymore. I mean, this is a legacy media company. Cable networks are not surviving. TNT, TBS, no one really watches those anymore. What matters is where this goes from a streaming perspective. And we're going to have to see how accretive this ends up becoming for Netflix. Again, my gut reaction, and Steve will talk about it later as well on the show, on the close, is that it's bullish. But there is a lot of debt that Netflix is bringing onto their balance sheet. And the debt's not that big of a deal, but it's also like that is something that's going to start navigate. The multiple that Netflix gets has never been a multiple with that much debt. And I think it's going to potentially affect shareholder equity. Like, we really have to talk about what this means for the liabilities they have and, how fast they can outgrow that. So we'll try to do some more analysis there. I think we also have to get the exact HBO Max subscriber number, because then we can sort of calculate how much revenue Netflix is adding for paying for this deal as well. And they're estimating in year 2, you'll see accretion on the EPS side of things. And if that's the case, that is a way for Netflix to grow over the coming years without having to just produce their own content. So that's what we got on Netflix. That's down about 3.2%. SoFi still down 7.4%. I am very curious to see if SoFi, after the dilution yesterday, is going to continue staying at these levels, or if this dip gets bought up. I'll put a poll in the chat and see what people think. Do they think the dip gets bought up? Again, I really don't understand why they diluted, but because I don't understand it, and quite frankly, no one else understands the exact purpose for it, you got to trust the management has some idea of where the dilution is going to play out. Does the SoFi dip get bought? And you also got to trust that there's something they're planning to do to make this to make this a real thing. Rubrik, great earnings yesterday. Again, I was not live to cover it. Shout out to Sam. I think this is a name that he pitched on the show. Wow, up 20% right here. He pitched this back in September or early October. 19.95%. They beat on the top and the bottom. So you got Rubrik getting some momentum right here. This stock was actually, it was around this range when Sam pitched it, and then it fell down to the low 70s, and it was kind of weird why that happened. But they ended up putting up some really good numbers. It's a name in the software space that's getting a lot more attention in terms of their progress. Rubrik right here, wow. I didn't even see these numbers because I was out, but there you go. Beat by 159%, profitable quarter versus the market thinking they were not going to be profitable. That's probably what really got the street excited. And they beat revenue by 30 million. So another software name that continues to show some more momentum, which is exciting. Abhishek says this is not a dip in SoFi. Dip was when it was sub 24. I agree. 27 is not the dip. Down 7% is where it was a couple days ago. So it's just annoying. I get it for why people are upset. But it is what it is. It is what it is. This is how SoFi operates. I mean, they've done this many, many, many times, and I guess this is how they're gonna continue to finance a lot of different things they need. I think the thing they have to prove that the dilution actually is worth something for shareholders, because there's no Technesis acquisition or Galileo like they did back in 2020. Even the last dilutive raise, I think people are still confused why exactly that needed to be done outside of the debt refinancing. So I think people are just curious, why does this company need that much money? And I imagine Noda will give more clarity on it over the coming months. S&P 500 right there going green. Amazon going a little green as well. I ran down about 1.3%, then Palantir right here, 177 in the pre-markets. Again, we're going to get the data for PCE at 10 a.m. and we'll discuss what happens with that. But that could also be something where maybe, if you're thinking of making a trade after 10 a.m. is a bit more important once we get that piece of news, and we'll see how that impacts the broader market. Robinhood, I did get access to Robinhood banking yesterday, and let me just say, this is legit. This is very, very legit. I'll write a review on it later on X over the weekend, but it's one of the best apps I've ever seen. It's just it's an entire ecosystem of your brokerage, credit card, net worth, sending, receiving money. It took 3 minutes to sign, less than 3 minutes to get in. And it was really cool. So I think they're rolling it out at a much heavier rate. It's very, very, very bullish for Robinhood going into next year, because you can imagine, they have 27 million users. Even if 5 to 7 million sign up for banking and they hook up direct deposit, which you get 3.5% APY if you do direct deposit, it's a lot more deposits coming into Robinhood. And they already are killing the deposits by getting all these transfer bonuses to come in. They have a natural flow of deposits based on people that can continue contributing to the platform. Now, if they get direct deposits, it's a big deal. It's a very, very, very big deal. So I think a lot of people are now getting access to it, and you have to sign up through a wait. So I got a wait list offer last week, and I think a lot of people did. And I saw a lot of screenshots yesterday of people getting accepted. So I think it should be rolling out to millions of people by early 2026. Robinhood does have an event on December 16th as well. So you've got banking coming out, you have the prediction market catalyst, and then you have the AI stuff they're introducing on December 16th, which should be very, very important as well. Yeah, you don't get 3% on every deposit. You get 3.5% APY if you set up direct deposit. So if you're getting paid from your employer to your Chase account, if you switch that to Hood, Chase is giving you 0.001% or whatever in their checkings account. Robinhood will give you 3.5%, which is really cool, dude, because to get 3.5% just on your direct deposits and just have it in one ecosystem, I think it's very enticing for people. And again, that could just be another way that deposits continue to scale. S&P right there, 684.39. You got Palantir at 177. Bloom, which had a great day, that was up 15%. Then Oklo was up 15% yesterday. It's down 4%. Now, here's another thing about the high beta names that are in that sort of meme stock bucket as defined by the meme ETF. If you look at the entire bucket of those names, they're up 9% this week. So a lot of these names are coming back to fruition, and they're getting some excitement. Now, are they going to get back to all-time highs? I don't know. BM&R, by the way, is included in that bucket. BM&R was up 8% yesterday, down 2% in the pre-markets. But you are seeing a little bit more momentum in the Oklos of the world. And, obviously Jensen saying what he said about nuclear reactors the other day on the Joe Rogan podcast, that also really, really did help the nuclear stocks. But we're going to see if those continue to go green. What does private banking even mean? I think it's more of a branding thing. It's not really like private banking. There's a lot of features inside of Robinhood's banking app that theoretically wealthy people have had access to for a long time. And Robinhood is just trying to bring that in, give it to more people. So I think private banking is just a name for it, but the underlying argument is just a really good experience that has a lot more features than you would expect from a typical bank. Meta right there at 661. So Meta held on to the 4% move yesterday after the Zuck's news that he was cutting some people from the metaverse, or cutting some essentially spend for the metaverse by about 30%. So the fact that Meta kept its move, I think, is actually really bullish. It could have gave back all 4% of the move. Wow, Vlad's on the compound. This popped up just now. Oh, that'll be a fun one. That'll be a fun one. Look at that. Our boy Vlad talking with Mr. Josh Brown. All right, that's cool. So we'll probably get some good content and some clips out of that later. But yeah, it seems like the Zuck's news was bullish, and the fact that Meta didn't give it back, it was up at 680, it's at 660, but that was pre-market. So the fact that the market's actually holding on to that idea that efficiency is bullish for the stock, I think is good. And if you're a Meta investor, that's important to kind of hold on to that name as well to make sure it continues making its momentum. Let's listen to our boy from Morgan Stanley, Mike Wilson. He's been pretty bullish this entire rally in November, and let's just get his broader perspective on where he thinks the market is going right now.
Continuation of this year's story. I mean, we had a view coming into the year that they were going to probably do the growth negative policy stuff first, and it turned into sort of kitchen sinking it. And that all happened faster and more dramatically than even we predicted. So that when they flipped the switch in April, I mean, now we're looking at this just reversion of all of these revisions that got so negative. And now, I mean, to be honest, I mean, some of the stuff they've done has been even more constructive. I mean, the big, beautiful bill turned out to be much bigger than we thought, particularly from a CapEx incentive standpoint. There's a real benefit to the consumer in the first half of next year in terms of tax cuts and tax benefits from the SALT deductions increasing, as well as the tax on tips, et cetera. Then you have the story with the Fed now kind of turbocharging this story. So you've already had the earnings revisions. The Fed's now is going to be, tailwind at your back. And this is the broadening out story that I've kind of referred to several times in the show already. So this is where I think investors have to make a choice. There's a fork in the road now, as Yogi Berra would say, take it. Okay, we're going to take the fork towards the broadening out. And that would be areas like consumer discretionary, some of the financials that haven't performed. Some of the financials have done really well, but there's parts of the financial sector that haven't done well. Transports, you mentioned that. That's an area that's really suffered. Some of the commodity patch hasn't done particularly well. Consumer goods over services. So there are plenty of things in the market that have not worked yet, that don't have high multiples, where the earnings are going to surprise on the upside. You get multiple expansion and earnings growth.
So you see the benefits of the tax bill. Any of that offset by increased premiums for healthcare with the roll off of these subsidies? Because that's a big number. But then you might say, hey, listen, that's a lower earning consumer, so maybe it's not that big of an impact on the broader economy.
That's right, and the immigration restriction, because that clearly was a funnel for consumer spending, but once again, lower end spending. So it's a good trade-off. The biggest beneficiary of the bill is the middle income cohort, and they have a high propensity to spend in areas that we're talking about.
Yeah, Mike Wilson's core argument has been around this idea that this K-shaped economy will lead to the Fed easing because they want to, protect against rate cuts and or protect the labor market. So, you're going to get rate cuts. And if you get rate cuts, that is going to be conducive to stocks. So the simple argument has always been, if the Fed continues to ease, which we're going to have the meeting next Wednesday on December 10th. So I'll be live for that. Yes, Wednesday. Then that could be bullish. And obviously, it could give a lot of relief to different consumers. Now, PCE is coming out at 10 a.m. The expectation for it, from what I'm seeing, let's pull this up right here, is... Oh, we also get Michigan consumer sentiment is 0.2%. So if we can come in, and then year over year, it's 2.8%. If we can come in below 2.8 or at 2.8, this could be a fun Friday. Now, granted, do we actually come in, if we come in at 3, this could be a little bit of an ugly Friday. Although maybe the market brushes it off. So we're going to have to see. But that number in the next 45 minutes definitely is probably going to define the majority of at least the morning's trading action. And we're going to see when we get the number and how that ultimately impacts this week. I mean, this week has been a relatively strong week. You're getting a lot of stocks get back to some of their core levels, and they're doing it in a more healthy way. So the question is now, can we sustain that towards the end of December? Cheeky, thank you for the super chat. What's the likelihood that the household robots are included in the support for the robotics industry? My husband randomly purchased IRBT, who are heavily in debt, and I want him to sell as he's now up 20%. IRBT, iRobot. Oh, yeah, this one. Oh, wow, it's up 20% of the pre-markets. Is there news on this? There was news on this one a couple of days ago, right? I don't think we had a lot of time to cover it because of the NVIDIA headlines we had. I don't know much about IRBT. I wouldn't be, if your goal of holding on to this is because the administration might create a robotic czar, I would not hold on to this because, I mean, at the end of the day, it's a $96 million company. I don't think the administration is going to care that much about an under $100 million company. But number two is just like the robotics thesis for the administration is going to be more towards manufacturing, more towards, the stuff that Amazon and Tesla and Symbotic are doing. Maybe not what the smaller companies are doing, because could they catch a bid being in the robotics bucket? Yeah. But if you bought it for that pure reason, I wouldn't count on it to be the case. Yeah, iRobot is Roomba, for those that don't know. So it's, I don't know if the administration cares that deeply about something cleaning your house in that respect. So yeah, I mean, I don't know why it's pumping 20%, but if you're up on this and you don't have like a fundamental thesis, you just bought it for the hell of it. I mean, personally, I would just take the profit and get out and see how this ends up playing out. Warner Brothers right there. That's up 4% in the pre-market. Again, for those that missed the news, Netflix is acquiring Warner Brothers officially. It'll take about a year for this to get regulatory approval, maybe less if Netflix and Warner Brothers have someone in the administration that can fast track this. And Netflix will have all the juicy content that currently exists on HBO Max. Okay, so the NVIDIA interview that I did last night. So over the next coming days, I'll be posting that interview. I interviewed a man named Justin, who is one of Jensen's 30 direct reports. And the conversation I had with him, I thought was really, really interesting. So we did the interview. I did it with him and Kevin. Kevin is one of the core leads for commercial sales at Palantir. And it was a great interview. It's about 15 minutes and it'll be uploaded next week. But the description of the partnership, and I got to talk to someone named Zach, who is one of the chief guys underneath Shyam Sankar at Palantir. And he's out of the London office, but he was in New York yesterday. And he kind of was really describing the partnership. I know a lot of people are still kind of confused on sort of the metrics of the partnership, but at its core, basically they both realized, hey, if Palantir is able to provide software to companies that can operationalize the LLMs in a more sophisticated way, especially with all the CUDA libraries and the NeMo models, which is all of NVIDIA's proprietary software, then that just means more GPU and compute demand. Because if you have the software that's having more API calls, whether it's Anthropic, GPT, Gemini, whatever it is, I mean, all those are going through an accelerated computer as in some data center in some place. So for NVIDIA, it makes a lot of sense. And for Palantir, it makes a lot of sense because at the end of the day, you're having to use their ontology to be able to make sense of those LLMs. So it really is a chips and ontology type of thesis. But the way he described the partnership, I actually got to see a boot camp yesterday. So I was in a boot camp earlier in the day with NVIDIA and Palantir. And we talked about the boot camp in the interview. It was really cool. It was 7 or 8 customers that actually started building using some of their data on the collaborative tools and the new models that NVIDIA and Palantir launched together. And I mean, the time to value for some of these customers to just see what they could do, what the potential of what the world could look like if they were to integrate on this was so quick. And I think the big synergy here is that Palantir only wants to get paid if they prove that they can make you more money. And NVIDIA only wants to sell GPUs if they can prove that the value of those GPUs can accelerate the transformation of whatever industry they're getting into. So both sides are very rooted in this idea of we need to create the value to justify the value that we get. And that's basically what Justin was saying yesterday as I was talking to him from NVIDIA side. So after the interview, when we went to just get a beer, that's when we like really got to talk and have some fun. And I was like, so who is Jensen like? Like, what is like, this guy's running a $4.5 trillion company and he's talking about he reads thousands of emails every day. For those that didn't see this clip, this 12-second clip has been going viral as well, where Joe Rogan asked, what does his day look like? And Jensen's like, well, I wake up at 4 a.m. and I read emails every day.
I probably read several thousand emails a day.
How? How do you have the time for that?
I wake up early. This morning I was up at 4 o'clock.
How much do you sleep?
Six, 7 hours. Yeah.
Now, I saw that clip and I didn't really believe it. I'm not going to lie. Like, I love Jensen, but I really didn't believe it. I was like, this guy's not reading several thousand emails every day. And after talking with Justin, it is really hard to deny his work ethic. So this guy, Justin, joined NVIDIA back in 2008. He left in 2014. And the reason he left in 2014 is because he was like, I was dating and I was trying to solidify a girl who I was with and trying to, turn that into marriage. And, we'd be out for a Sunday afternoon brunch and I'd be getting texts from Jensen about, I need the slides by tonight. And he was, it's like, do I pick the girl or do I pick this career with NVIDIA? And that's when NVIDIA stock was not going to the moon. That was like kind of the 10 years where NVIDIA was stuck basically doing nothing. And so he left in 2014 and he told Jensen, he was like, I just can't give you the work ethic that you require out of me. And the fact that the guy had to leave the company, again, this is one of Jensen's direct reports. He has 30 direct reports. This guy talks to Jensen basically every day. The fact that he had to leave because he could not, and that was when NVIDIA stock was not going to the moon. So Jensen's still workaholic, trying to take over the world. And he's demanding this guy who was trying to, get this girl to marry him on a Sunday when he's supposed to be off from work. Jensen's asking for things to get done. And the guy ultimately concluded I had to leave because I could not have the type of work ethic that was required to be an actual operator at NVIDIA. He ended up coming back in 2018 after he got married and had some kids. And, Jensen welcomed him back with open arms because he was happy that he came back. So it was stories like that he was telling me that was just like pretty incredible to define the guy's work ethic. And, quite frankly, it made me want to buy more NVIDIA. Just like you hear all these stories about Jensen, but when then you actually hear people that talk to him on a daily basis and how they're interpreting this guy's attitude towards the work, it becomes credible. And so then I asked him, I was like, well, the company's $4.5 trillion, how is that work ethic still alive after all he's done? And he's like, dude, he really doesn't care about the money. Like all these guys are rich. They have more money than they can ever, that they know what to do with. He really cares. And he really believes that what's going on right now in the world of AI and accelerated computing is such a massive opportunity. NVIDIA spent 30 years waiting for this moment. They had the gaming cycle when, video game graphics cards were like a big thing and they were continuing to grow. Then, they had crypto mining rigs that ended up creating some demand. They had all these different little cycles because semiconductors are a cyclical business that gave them demand. And then that demand ended up dying out. This is one of those things where it's like, it's very hard to imagine the demand dying out anytime soon. And it is one of the most embodied use cases of these GPUs is getting them into the world and creating these data centers and factories. So then I asked the guy a question, well, everyone's saying it's an AI bubble. What do you think about that? And his answer was really simple. He was just like, I don't think people recognize the level of scale of the numbers that we have when it comes to building out intelligence factories. And he's just like, it's a very simple argument. If you think intelligence is the new oil, and that is going to be in every single sector of not only the United States economy, but the global economy, then the amount of compute that we have to build to be able to power that is so astronomical that people can't wrap their heads around it. And he's like, I don't blame people for not being able to understand it, but nonetheless, it is real. It is happening. And, NVIDIA is at the forefront of making that happen. So it was really cool. It was really cool just to get his perspective on kind of how he thinks of Jensen and how much of a hard worker Jensen is. And it's inspiring. I mean, Jensen's 60 years old. He's every single day going at it. He said Jensen probably works 18 hours a day still to this day. And now I believe him. Given the guy had to quit because he could not handle the workloads that Jensen was putting on him. And that was before the incentive of, maintaining the pressure of keeping the stock up was there because the stock was doing nothing. Shows me that now that the stock is actually in the right direction and people, believe so much in NVIDIA, that the work ethic is probably only even stronger. So it was a fun conversation. It'll be out soon, and I think people will enjoy it. S&P 500 right there, 684. Amazon is up about 0.33%, and then Meta is up about 0.5% as well. Who's buying Netflix and Sofi? Put it in the chat. I see a couple people saying they're buying Netflix and Sofi. 65% of you say the Sofi dip will get bought. We are going to find out in 4 minutes. Why is Noto releasing a PR to calm investors down? It's a good question. I don't think... Well, they did do a PR last time when they had the dilution, right? Am I tripping or they did? Or was it just a regular PR that just said they diluted? We got the pricing of the common stock. Pricing is $27.50. Yeah, I mean, I guess whenever Noto does an interview next, he'll probably explain it. I see a couple people saying buying some more SoFi. 2750, 8.18 million shares. Well, 54 million shares. That's 2750. And then they have an option for another 8 million. And this will be by Goldman Sachs. I don't know. I think you got to be patient on this one. You got to be patient on this one for SoFi to see when this ends up happening. I see a decent amount of Netflix is in the chat. Tanner says, what would the PR say? The PR would say that he's buying out Tanner Future Investing. That's why they raised 1.5 billion to buy out Tanner. That was the goal. Tanner will be an actual SoFi spokesperson. It's a pretty hefty price. I wish I could get 1.5 billion for that. That's a hell of a buyout, dude. So that's what the PR would say. SoFi right there down about 7.5% as we have 3 minutes before we open up this market. Amid, it's interesting because the closing of the equity offering is Monday after S&P inclusion, so Toots can buy 1.8 billion Monday at 27.50 when it's at 31. Well, that is kind of interesting that the timing is on Monday. I didn't know that. The question is, does SoFi get in to the S&P today? I mean, wouldn't that be a hell of a Christmas present for everybody? That would be fun, dude. That would be so cool if they actually get in. I mean, again, S&P is always a little weird and they like taking their time with this stuff. But what other companies are up for even eligibility? I know Reddit's one of them. I think there's a couple software names. But I don't know how many others that are out there. Adobe has earnings next week. Josh Wolf from Lux Capital, which is a very tech-oriented VC fund, like deep tech, hardware, robotics, etc. They came up with this new AI model on evaluating stocks, and they're not like Goldman Sachs or JP Morgan or anything, but they have their own different in-house proprietary models they're using. And he tweeted out that their AI model told them that Adobe is the most undervalued and oversold tech stock in the public markets. Which, look, is probably right to an extent. But the question is it just Salesforce where the narrative is so bad on Adobe that it doesn't really make a move? Or is Adobe like a UNH where, they shift the narrative a little bit, get some better EPS growth, and then boom, you're back into business? I could have said that without AI. Yeah, you're probably good. So I don't know. We're going to see. Maybe Adobe's worth a deep dive. I really wish Canva were to go public next year, and maybe that ends up happening. But it's definitely one of those names to at least potentially look at if it continues staying at these levels. All right, folks, let's get into it. Thank you, everybody, for being here. First Friday of December, Friday, December 5th, 9:30 a.m. The stock market, once again, is open. All right, wake your ass up. Let's get into it. S&P 500, 685.50. We are green. SoFi dip. Let's see what happens with this one. 27.33. You're down 7.6%. Not really seeing the dip buyers come in yet, but it is indeed down. Meta, 665. That's up. Robinhood, that's down about 1.72%. Netflix continues to go down, 4.7% down. Netflix now year to date, it was up 30%. Year to date, it is now up, wow, 11%. I didn't even realize Netflix lost 20% over the past couple of months. It was at $88 on January 2nd. And this is all post-split. Wow, Netflix underperforming the market now. It looks like they're giving up the short-term gains of 2025 to build for the next decade. Pouncer right there at 178. That goes green. Snowflake down another 1.6%. Oklo down 6%. Bloom Energy down 3%. SMR down about 4.2%. VRT is up a little bit. UiPath, congrats to those that got into this one. 18, still up about 20% for the week. AMD getting a nice little move. 219 on AMD. NVIDIA, 184.50. NVIDIA and AMD both getting some love. S&P, I think NVIDIA is helping the S&P right there. 686. Again, we get PCE in 30 minutes. So for those that are making trades, just realize PCE in 30 minutes probably has somewhat of an impact on the broader market. We're going to see how that one plays out. Rubrik, also amazing earnings yesterday, 23%. Shout out to Sam. I know he's heavy on this one. $87 right there. This stock was around this range a month ago, and then it fell. So it gave people an opportunity to get in about 25% cheaper. And if you bought yesterday, you are probably liking this price action. 88 on Rubrik. Wow, this one's just running. Straight up running. Look at that, 26%. Not even stopping on this one. So you got Rubrik right there at 88 bucks. Again, Sofi is down because of a $1.5 billion offering yesterday. For those that don't know why it's down, 8% right here. This is natural. I mean, when you dilute by that much for no apparent reason, the street's definitely not going to love it in the short term. So we're going to have to see until we get some clarity on why Noda is doing this. That's down about 7.8% right there. Robin is down about 2.3%. Meta continuing to hold on to its momentum. Amazon finally back to 230, which is nice. It's been stuck pretty much around that 227 to 230 range basically all week. Rock Lab, that's down about 1.3. Grabs at 530. Reddit's at 227. Where's ASTS that had a monster day yesterday? That's selling off just a little bit. Got back into the 70s, only down about 1.4% for the day. AppLovin almost back to 700. This one got to freaking 520 2 weeks ago. 697 here. Again, a lot of these names that got sold off, those dips were getting ready to get bought. Okay, the semi names are pumping. Broadcom at 391. AMD is also making a big move. S&P looks like she wants 687. AMD right there, 221. Where's Google? Google's at 3. Wow, Google back above 320. That's nice. Apple, are we at 285? We're at 280. Microsoft still at 480. So it seems like AMD and Broadcom and a little bit of NVIDIA are really helping the S&P today. We might have some of the healthcare stocks also. Yeah, Eli Lilly up another 1%. Okay, so you have a variety of different names throughout the entire index that are getting a bit of a move right here as they're doing well. And again, for those buying the Netflix dip, I don't think it's a horrible dip to buy. I just think, you know, you might want more clarity on the economics of the deal. But if you don't even care about that, if you just, you know, you're buying literally as like a, just, hey, what is this going to do for the streaming industry? If it gets approved, it's going to create a monopoly for Netflix, like a real meaningful monopoly once HBO Max is taken out. I know you have Disney, you have Peacock, you have Paramount, but still, this is big for Netflix. So if that's the thesis and it's a 5-year thesis, then, you know, obviously I think the stock will be higher than it is 5 years from now. But question is just going to be how they're going to navigate the regulatory hurdles of it and what it means for the actual top line revenue growth. NVIDIA right there, 183.70. That gets a red candle after getting to 184.60. There's been a lot of news yesterday about China and Trump talking about getting the H200s into China. You know, Jensen has come out and said, you know, China doesn't even want the H200s. They want the more preferred chips like Blackwell. So even if that does get approved, I don't know if that's a massive catalyst for NVIDIA. The big headline they had from Bloomberg was that they are going to, or they're winning in their lobbying efforts to stop the United States from completely banning any level of China chip sales. And that would be good for NVIDIA and AMD. But ultimately, they need to approve the best chips getting sold to China. Austin says, I bought the Netflix dip. They could buy WBD at basically any price and it'd be accretive. Yeah, I mean, look, that is fair. I think that, I mean, if they paid 90 billion instead of 82 billion, like, yeah, that's a hefty price, but still, you would imagine that level of content offering would be accretive to a company like Netflix. Nebius right there, 99.50. That's down 3%. Oracle, 217, trying to get back to 220. This was at 185 a couple weeks ago. Look at Tesla, 455. Tesla holding on and doing its thing. I don't know why ELF pumped the other day. Is ELF still pumping? No, it's flat, but it was up 9% like on Wednesday. And I don't think we found out why. I don't think there was like any major headline or upgrade on the stock. Google right there, 321. But ELF right here, still flat. IoT, they had earnings yesterday. I think I saw their numbers. Wow, up 11%. Let me pull those up. Yeah, a lot of companies this week, they I mean, not only do they crush earnings, but they got rewarded by the market. Oh, Trump just tweeted something. What is this? I I have just approved tiny cars to be built in America. Manufacturers have long waited to do this, just like they are so successfully built in other countries. They can be propelled by gasoline, electric, or hybrid. These cars of the very near future are inexpensive, safe, fuel efficient, and quite simply amazing. Start building them now. Thank you to the DOJ and the Department of Transportation and Environment. Tiny cars? Is he talking about like the cars you see in India that are like super small? He's talking about like this shit? Like these like $10,000, $15,000 cars? What's a tiny? Do we have shrinkflation affecting cars or something? What's IoT that's up 11%. Where's GM stock on this? GM is up a little bit. Are GM and Ford going to make tiny cars? Tesla, I guess, is making a tiny Cybertruck. That one's green. Look at that, 458 for Tessie. So when I went to India, I've seen a lot of small cars. I'm sure people in Southeast Asia, because the roads are smaller. So the cars have to, I mean, not necessarily the roads are smaller. The roads are more congested. So you need you can't have a Cybertruck in India. Like I don't know how a Cybertruck would drive the roads of India. So the question is, do we want tiny cars in America, and do we need tiny cars in America? I don't think it would be necessarily a net bad thing. The question is, could it actually be more affordable cars that are tinier for people that can't afford, a regular like Honda Civic? And, maybe that's Trump's economic angle around this. Broadcom still up 2.5. NVIDIA goes red. So NVIDIA's selling off right here, 182.96, not able to hold on. Microsoft at 482, Lilly's at 1,000, and then Ford at 1319. Nano banana car. All right, so I guess that's kind of what you're seeing here. Yeah, 12,500 for a new car. Definitely, I think there's an economic argument here. I think he's trying to make cars more affordable to an extent, which I don't think is crazy. But I think he's trying to understand it at a better level for some of those lower end consumers that could like it. Ford right there at 1319, that is green. Eli Lilly, that's at 1,021. App Lovin 690, and then Broadcom at 390 as well. All right, so we got about 20 minutes. We are going to get that PCE data, which is really going to matter. By the way, IoT, they beat earnings by 25% and beat EPS by 4%. So that also got the market getting some momentum. Americans are too fat to be in the tiny cars. Oh my gosh. Well, you're not necessarily wrong there. You're not necessarily wrong. China updates. What do we have here? China Vice Premier held call with U.S. Secretary Bessent and Greer. Okay, so we had China and Bessent that is talking. We'll see if that affects the markets as well. 686 on the S&P, still holding on to that level of green. SoFi, are we getting a little bit of a rebound? SoFi, no, this thing wants below 27. Wow, we did hit below 27. We had 26.94 on SoFi. Where's Bitcoin? We didn't even look at Bitcoin today. Are we still holding 90? Oh, dude, we're barely holding that. Why is she dumping? Why can't she just stay at 93? Okay, so where's ETH then? ETH is also losing 3,200 after the Fusaka upgrade. ETH and Bitcoin both down. Now, if SoFi were to get to like the 25s, I feel like this would be an easy dip buy. I don't know if we get there off of dilution. Especially because, again, SoFi is not some random meme stock that's diluting for the hell of diluting. They don't need to dilute. There has to be a strategic purpose to this. It's just we don't know yet. And if you think that purpose is reasonable, that's where you probably meaningfully buy the dip. Google right there, 322. Google's been normalizing 300s. It's been almost 2 weeks where we've had Google above $300 a share. So it is very nice to see Google keeping this this level. The ECB says that we see significant risks to the inflation outlook. We see downside price risks at least as significant as up. Nebius right there losing 99. The data center plays down about 5% on the day. Yeah, Iran also down 5%. So ECB talking about inflation risk. Canada had some news. Their jobless rate fell to a 16-month low. The unemployment rate in Canada fell to 6.5% below expectations of 6.9, lowest in 16 months. Not horrible for Canada's labor market, as you're seeing across the world. Labor markets are not necessarily deteriorating; they're stabilizing, even if they are weakening. India increased their GDP target as well today to 7.3%. The earlier expectation was 6.8% for India. So you have Indian GDP going up, Canadian unemployment flat. NVIDIA selling off, unfortunately, down 1.2%. Not sure why it's getting hit here, but it's getting hit. Hood probably selling off on crypto. Amcor, are they selling off? Amcor holding on, 43.61. This has been a champ all week, holding on to the 40s, which has been very nice. Reddit right there at 228, and then the S&P. It's 685. Netflix bounced. Yeah, I mean, it definitely looks like buyers came in. It's only down 1%. It was down 5. Now it's down 1. Buyers came in at around 98. 98 was max pain so far. 97.74 for Netflix. So if you bought that dip, you're up about 3% already. Fear and greed. We are officially past extreme fear. We are at 41. Wow, we're getting close to neutral. All right, the days of those easy dips might not be as easy anymore. 41 on fear and greed. If we get to neutral, that's where things might start stabilizing more. PCE in 15 minutes, I think, is going to really determine what direction we're going to be going to today. Victoria's Secret up 15%. Did they have earnings? Did they have earnings? VCO. It would be another retailer that, wow, 15%. I mean, again, why are these retailers able to sell this much stock or this much inventory if the consumer is that bad? Yeah, dude, they beat by 54%. Street thought they would lose 59 cents a share. They came in at 27 cents loss. Revenue, they beat by 5%, 1.47 versus 1.41. I mean, I like, these companies cannot be putting up these numbers if the consumer is dead. Like, they just can't. At the end of the day, the consumer has to buy stuff from a Victoria's Secret or Abercrombie. And that doesn't mean the consumer is amazing, but it does mean that it might not be in the worst situation, which is very bullish. Like, because if we're getting rate cuts and the consumer is decent, like, that is not a bad scenario going into 2026. Tesla right there, 455. NVIDIA, I don't know why it's selling off. That's weird. It was at 184.50 last night. It was basically at 184.60 in the pre-market. And then immediately got hit. We should be expecting below 2.8, or we should be hoping for below 2.8 for PCE. The expectation is 2.8 yearly, 0.2 on the monthly. This is for September, by the way. So this is old data, which means the market might react immediately and then might not care because, like, the September stuff doesn't matter as much anymore. But there might be a moment where it ends up giving some momentum. Lulu, yeah. So I've been wondering when Lulu is going to be the next one to pump. Lulu, I think it bottomed at 160. It's at 187. That's up 3% today. Because, like, Lulu is the quintessential retailer that has been completely sold off for the past basically year and a half. And the retailers are back in action and they're putting up numbers. Lulu's earnings are next week. That's going to be a big one. Because if they can show the consumer spending again after like 5 quarters of showing consumer weakness and blaming the tariffs and all that stuff, it'd be very bullish for Lululemon if that takes out. Why is Warner Brothers only at a $62 billion market cap if the deal is for $72 billion? That is a great question, and that is because the market does not fully believe this deal will happen. So when a stock gets acquired and it's at a price of $5, for example, and the stock's trading at $3.50, that means the market thinks that there's a 30% chance, given 350 would be 70% of the total deal value, that the deal doesn't happen. So in this case, the market is basically saying there's a 10% chance, 9.2% chance that this deal doesn't go through. So there's an arbitrage there. If you are so convicted the deal is happening, you can buy this and make 9%. It's like almost a guaranteed 9% theoretically if the deal happens, because you have to get $27.50 a share. But if it doesn't happen, then you're stuck holding the stock and maybe it drops 9% if the deal doesn't go through. Now, based on the press release, it really does feel like this deal is happening. SoFi, by the way, back to $27.50, bounced off $26.94. But I guess we're going to have to see if the deal ends up playing out. Anthony Noto is not on the board of Warner Brothers. There's no way, right? You're trolling me, right? That'd be crazy if Noto was. Yeah, Noto's not on the board of this. Dude, that would be wild if Noto's on the board of Warner Brothers. That'd be crazy. Yeah, 5:15 we'll know about the S&P 500. 5:15 tonight. So it's going to take till the end of the day to find out. Adobe's up 3%, right? Getting some love there. Salesforce, good earnings this week, was not enough to really move the stock. I mean, you got somewhat of a move, nothing crazy, but it is up 3%, so maybe it's headed in the right direction. Microsoft right there at 481, AMD at 218, Apple 11, 685. And then NVIDIA still stuck at 181.60 on the day. Yeah, Warner Brothers is one of the top performing S&P 500 stocks just based on this acquisition stuff, which is pretty crazy. Wait, is he legit on the board? Dude, I'm on their website. I don't see Noto. That's why I just checked. I thought you guys were trolling. Look, this is the website, unless I'm looking at it wrong. Where's Noto? Oh, I didn't click on board of directors. I clicked on leadership. My bad. Oh, there he is. Okay, well, Noto's getting a bit of a payday then if he owns some stock. Huh. That is quite interesting for this deal to happen on the day where SoFi is getting this dilution. Wow, I didn't know that. I don't know what to conclude from that, but I guess that is kind of cool. Salesforce right there. Up 3%. That's why he diluted. Oh, man. Yeah, iRobot now 40. What is the news on iRobot? Why is this? Are they getting? They were supposed to get acquired a long time ago, right? Are there more acquisition rumors? This thing to be up 46%. I have no idea why that's there. Hood's dumping because of crypto, most likely. Oh yeah, this thing was weird, bro. This thing was so weird. How much did Perplexity shill out for this Cristiano Ronaldo partnership? I mean, this was so, like, I don't know. It was so weird. Like, Cristiano Ronaldo says, winners never stop learning, never stop asking. They have this cringe commercial about Perplexity and learning about soccer and stuff. And to me, I'm like, this is what Perplexity is actually doing right now. Like, does anyone even talk about Perplexity anymore? Do we even care? Like, I know some people still use it, but like, it's like Comet. I tried. I'm not like, it was cool, but I don't use it on a daily basis. If anything, Chrome, once they incorporate a lot more AI stuff, is still just going to be what I go to every day. That's one of the companies, 20 billion valuation on that. I mean, I still think there's an exit for them, but do they become like a $250, $300 billion company one day as a GPT search engine wrapper? I don't know. They're sponsoring everybody right now, but the sponsorships to me feel more like red flags than anything. Because they're just taking their investor money and throwing it into influence and seeing if they can get users. Like, the beautiful thing about product-led growth is that when a product is so good, it just grows. Like, yes, you need to work to get some distribution, but if a product really is that good, it is going to find more people, and those people will have retention and they will stay using the product because the product ends up actually helping them in their lives. When you have to pay so aggressively to soccer players to make people think that, oh, if Ronaldo's using it, then I should be using it, like that, it's it's not really the type of virality as a fast-growing startup that you want to tap into. Bitcoin right there at 90,000, S&P 500 at 686 on the day. Perplexity should have sold to Apple when they had the chance. I wonder how serious Apple was to buy them too. Because like there was those rumors that were going out there. Maybe they were just rumors, or maybe Apple legit said, hey, we want to swallow you guys up and say, put you, into our ecosystem. But the Perplexity CEO definitely has a lot more ambitions than to get acquired. Bitcoin, it's really trying to hold on to 90,000 by like $100. Just touched 89 for a second. Same thing with Ethereum. Just trying to hold on to 3,000. Silver, is that moving today? Gold is up once again. Silver, wow. I think this is new all-time highs. 58.60 on silver. Goodness, dude. That's pretty damn amazing. Look at that. Silver, 58.60. And not necessarily slowing down. This one has been one of the better performing commodities. I mean, one of the best performing commodities this entire year. Speaking of robots, let's take a look at this, dude. We're talking about iRobot. You guys remember Beeple? Beeple is the guy who did that $69 million NFT. Apparently, he has robots at a conference in Miami called Art Basel.
By the artist Mike Winkelmann, better known as Beeple. And basically, these are robot dogs with the heads of Jeff Bezos, Mark Zuckerberg, and Elon Musk. And each of these robots have a built-in camera where they take pictures of their surroundings. And then an AI program picks the best pictures, and each of the dogs, let's say, releases the pictures as one of these as an NFT. Let's hear from the artist.
Increasingly, for better or worse, our view of the world is largely shaped by these sort of like tech billionaires who own algorithms that can change what we see and how we sort of like see it. And so we're seeing the world somewhat in a way through the lens of their eye. And so I think, and that is a sort of power that they have that is much more unilateral. They don't have to go to Congress and try and get something passed to change the algorithm. They don't have to lobby, the UN for a resolution. They just do it.
Now, Beeple made 10 of these, so it's 2 editions of 5 different dogs. They each cost $1,000. They sold out.
Bro, this is so creepy, but this is the world we're living in. But it's so creepy.
Immediately. We also talked to people about what AI means for art and artists. Here's what he said.
It will absolutely be disruptive to certain areas of the craft of art. But I think in terms of destroying creativity, I think that's absolutely ridiculous. I think it's just the opposite. I think now you see things that have to be so unique and new and novel to break through the noise of everything that I think it's actually raised the bar for creativity in many ways.
And guys, if you want to read more about what's happening here at Art Basel, you can sign up for the
Okay, so I guess we'll see how the market ultimately interprets those types of creative robot projects. But, in the age of robots, I mean, there was this account yesterday I saw on Instagram as well of like actual human robot, not human robots, but like robots that look like humans that are being made in China. It's getting kind of crazy. These things look very realistic. And so putting a head of a tech billionaire on a robot dog, I feel like is mild compared to what's going to happen in the future. But this is the world that we're living in, and we're seeing it play out. S&P high of days, 5 minutes until PCE. 5 minutes until PCE. If you've got some covered calls that are really close to the money, maybe you buy them back right now and give back a little bit of the profit just in case we get a crazy pump. Or potentially the pump is not even that real, but in the next 4 minutes, we will get PCE, and we're going to see how the market thinks of it. Now, granted, is it enough to really, if you've got NVIDIA, I don't know, 189 covered calls today, do we get a pump that's enough to really get NVIDIA to 189? I don't know. but it really just, I guess, depends how the market interprets PCs. SoFi is definitely going to be affected by this. PCE is important for them in the context of rate cuts. Tesla 454, S&P 686. But also it's September, so it's like, even if it's good inflation data, if the past 2 months were bad and we don't have that data yet, I don't know if the market's going to care that much about September data. Yeah, are we about to cook or are we going to get cooked? Is that, yes, that's what I'm saying. Are we going to get cooked? Or are we about to cook here? 686 on the S&P. Google still holding 300. That's holding on as well. That's not slowing down. Rubrik, are we still keeping 20%? Still keeping 20%. Salesforce actually having a move today. Salesforce and Adobe, both of these names. Same with Lulu. Again, Victoria's Secret crushed it. So they are holding on. Morgan Stanley, they came out with a note today. They continue to think that December rate cut's going to happen going into next week. Meta today, this morning, said they've struck several commercial AI data agreements with publishers ranging from USA Today, People, CNN, Fox, The Daily Caller, and The Washington Examiner. Meta backed away from compensating news companies several years ago, but has resumed paying for editorial content as it invests more in its AI chat tools that require real-time access to verified news. So you got Meta dishing out some, I mean, like, that's a better use of the Reality Labs capital. I'd rather than pay the publishers and just say, hey, give us access to your content, which is a relatively minuscule price Meta would be paying for this compared to what they're doing in Reality Labs. Yeah, or if not, they would keep getting sued, like the New York Times that's been suing a lot of these AI companies as well. Okay, here we go. 1 minute. 1 minute. I'll keep the screen on the S&P. I'll have the data on the side. We're getting consumer sentiment, core PCE price, personal spending month over month, personal income month over month. And then the core PCE price index year over year. So we're getting almost 7 numbers that could be having an impact here. Isn't it so fun? Friday morning, all of us together, Friday afternoon for some people, Friday night. And we're just getting ready to see if the portfolio moves super up or super down. Just all here together, waiting for this delayed number to see what happens. It's actually pretty cool. It's pretty cool. This one number that defines everything. Even though, like, in 5 years from now, this number is not going to mean shit, but today it does. It's also exciting, bro. There's this like spontaneity towards, like, all right, like it's quite frankly, you know, we talk about prediction markets, gambling. This shit is like, this is all of us wanting to see the gamble of if we go up or down. It's the thrill of seeing what happens when we get the data. Up 687, S&P high of day. She's moving up a little bit. The data is 2.8 versus 2.8 expected. 2.8 versus 2.8 expected. That's a really good inline number on PCE. Month over month, it was 0.3 versus 0.3 expected. Personal spending 0.3 versus 0.3 expected. Personal income 0.4 versus 0.3 expected. That's a beat to the upside, which is good. Consumer sentiment 53.3 versus 52 expected. That's a beat, which is good. And then price index month over month 0.2 versus 0.2 expected. We don't have a single miss on this. We don't have a single miss on this. S&P had a very slight green candle, and now it's back to normal. NVIDIA, little bit of a bounce, nothing too crazy. But almost every number here in line. I mean, you know, if PCE, if that came in at like 3 or 3.1, that would have been ugly. The fact that it came in at 2.8 is nice to see, and maybe that could be the trend for the coming months in November. Let's get a little bit more coverage on this. Market's not really reacting that crazily, but the numbers overall are not horrible.
Beginning September personal income comes in a bit stronger than expected, up 0.4, following at least up till now an unrevised 0.4. If you look at the spending side, up 0.3 as expected, half in the rearview mirror, which was up 0.6. Up 0.3 actually is the lightest going back to May when it was unchanged. If we look at personal spending on the real side, accounting for inflation, it is a goose egg, 0. 0 and 0 would be the lightest going back to -0.1 in May. Let's look at the price PCE price index on a month-over-month basis. This, of course, is the money ball, up 0.3 as expected, same as last look. If we look at year over year, it's up 2.8, exactly as expected, 1/10 warmer than the rear view mirror. 2.8 would be the warmest since March of last year. And now if we go core month over month, PCE comes in at 0.2 as expected, equals last month. And if we look at year over year, it's up 2.8 on core, which equals expectations, 1/10 lighter than the rear view mirror. Now let's look at Michigan. These are preliminary December numbers, 53.3. That's a nice beat. 53.3 would be the best since October when it was 53.6. If we look at the current conditions, 50.7, that's a miss. 50.7 is a miss. That follows a 51.1 and 50.7. Well, 50.7 would be very close to the all-time low, which was our last look at 51.
S&P now making a move. There you go. All right, let's see if it can hold. But there's your high of day, 687.54. Making a move right here. I don't know if it's enough of a breakout move for all-time highs, which is about $1.50 away. But if it is, that would be fun. NVIDIA bounced very slightly, still at 182.50. SoFi, little move. Bitcoin 91. That's bullish. Got a $1,000 candle. Same thing with ETH, moving up about $100. BMNR should be moving. BMNR, yeah, there's a green candle right there. Almost break even on the day. S&P still's go. I mean, the market seems to like it. Maybe a little bit of a delayed reaction from the immediate read of the number, but even Netflix, look at that, almost break even. Almost break even for Netflix. SoFi 27.50. Where's Palantir? Are we at 178? We were at 179. Dude, we haven't seen 180. We haven't seen 180 in a minute on Palantir. We fell all the way to 147. I mean, this could be good. CNBC headline. The Trump administration reportedly views the proposed $72 billion deal for Netflix to acquire Warner Brothers with heavy skepticism. You know, technically that could be why Netflix is going up right now, because investors might not like that Netflix wants to pay $80 billion. And but hold on. No. That's not, as per the agreement, they have to pay $6 billion in a breakup fee. So I don't know if it's bullish. $6 billion is better than $80 billion, but still $6 billion for nothing, if this doesn't get approved, is not bullish for Netflix. So I think they are incentivized to get this deal done. S&P 687, 663. Hood's trying to bounce. Are we trying to bounce on Hood? Hoodie, it's trying, but still down on the day. Again, with crypto down, you're going to get a little bit of pain on Hoodie. All right, let's get some more coverage and see what this looks like. But overall, this data, it's relatively strong. Maybe October, November is a different story, and we'll get that next week. But this data is not horrible.
It's hotter than they want, but it's coming in line with expectations. I think the surprise would be if we saw some sort of big spike up, and then they would say, uh-oh, do we need to maybe not be cutting interest rates? Also good news that Rick reported in the inflation expectations of the University of Michigan sentiment, and we did expect that overall sentiment number to go up. Remember, last time it was reported, it was government shutdown related. It was the lowest level since June 2022. So no surprise, we went from 51 to, what did he say, 53, little over that. But otherwise, you know, the income and the spending numbers coming in line, it doesn't change the narrative.
The spending was zero on a real basis.
0.3%.
Yeah, 0.3 on a nominal. Got it. Yeah.
So, I mean, yeah. But
No, it's fine. I'm just saying we weren't imagining that we had softened up spending in the fall. Market went through that. The market-based inflation indicators have been very calm. They've just not flared up. And so any talk of, you know, are we going to cut rates too much and let inflation become unanchored? It's not showing up in the markets. And it seems like, look, the stock market was always going to be fine with 2.5% to 3% inflation, as far as the eye could see, and always has been historically. It's basically the average since 1990. The 2% issue was if the Fed was going to try to wrestle it down there, then you were going to have to probably deal with tighter than optimal policy. So I think this fits fine. Market's been giving these numbers a lot of slack because they're old and they maybe are going to end up being shutdown influenced once we get there. So at this point, pretty steady as she goes.
Savings rate 4.7%. Yeah, I mean, it jives with what we're hearing from companies, which we've heard a lot from consumer companies lately between the retail earnings and some of these conferences. Remember what Walmart said about inflation? They said our expectation is that it'll probably peak, the peak impact from the tariff cost, that is, around the beginning of the first quarter. I think we begin to lap it and get a little bit easier there, which is a reason why the Fed should maybe look through the one-off impact of tariff, at least, inflation, which is not the whole inflation story, but is part of the goods prices. Newell Brands, just another big consumer company that makes a lot of staples. The 45% that we import that are subject to tariffs, that's a big chunk. We took 3 rounds of pricing, and we took pricing early and pretty aggressively to maintain the structural economics of the business. What I'm getting, Mike, is that we might be going through the kind of worst of the tariff impact. I heard that from PVH, that it's starting to hit in the holiday season, and that looking ahead to first quarter and second quarter, you've been sort of making this case for an upswing.
Yeah,
in the
I mean,
economy,
that's the read
right?
on how the
Because of
market
tax bill
is seeing it.
and also less effects of ultimately of tariffs.
Yeah.
Whether they're having a big effect or not.
Or we just anniversary them and it kind of gets lost in the wash. It doesn't really address what's morphed into this affordability perception, right? So it's sort of like, I agree, we're not really seeing an extra inflation push.
And again, these companies that are coming out with these reports around the consumer are a bit more bullish than not. Fed rate cut probabilities, are we finally above 90? Let's see if we're finally above 90. This was a good read. Nope, 87.2. All right, so the market's kind of saying it's September, so we're not going to care that much. Still, we got the rate cut coming up, or the FOMC meeting coming up in 5 days. So holding 87%. S&P's making a move. I mean, Palantir back to 180 after almost a month. S&P, it is less than 0.5% away from all-time highs. We did touch 688, 689.40, 689.70 is the all-time high. I mean, is 7,000 in play? Is it in play? Would not be crazy if we can have that end of year. Okay, here's a question for everybody. Do we think the rate cut is priced in? Meaning, if we get the cut in 5 days, do we rip? Or is it pretty much priced in? My take is I think we get a little bit of a rip. Maybe it's not a massive rip, but I think we could get a 0.5% to 1% move on the S&P because like it's finally solidified that that we're cutting rates. And maybe to sell the news in during the day, but the question then becomes throughout the rest of the December, right? If we can move higher, maybe it's not necessarily priced in. I'll do a poll on that. I do think to an extent, getting back to close to all-time highs, obviously there is some level of pricing in that we can't say isn't there. But there's still a 13% chance we don't get that cut. So there's still the market to an extent saying that maybe it doesn't happen. Oh, we got the Netflix co-CEO. He was just live as well. Let's get a little bit of his perspective here on why they ended up doing this partnership. Netflix now going green on the day.
Warner Brothers has some of the best entertainment in the world, period.
Faber's been helping the street understand the story all morning long, and he joins us on the phone with more details. David, as Netflix is poised.
This deal is all about. The combination of Netflix and Warner Brothers creates a better Netflix for the long term. It sets us up for success for decades to come. Warner Brothers has some of the best entertainment in the world, period.
He's pretty aggressive on that, right? He's just telling his investors, guys, we needed to do this and stop freaking out about this. Trust us that this was the right move. I mean, look, I would have to agree with him. I think it was the right move. Okay, you need to acquire content. Yeah, you put a period on it too. But like also you could imagine as a CEO, I mean, it probably gets frustrating because the pressure of having to produce hit shows is not easy every single quarter. And sometimes you don't know if a show's a hit or miss. It's not easy to find a Squid Game every time. So from his perspective, he's like, we have all this cash. Like, we need to do something with it. You guys want to see growth. Well, guess what? We need to buy stuff to grow. And this is, and you can't get mad at him at the price he's paying. It's an aggressive price because Warner Brothers, you know, ultimately has just a lot of assets, but it's not like you can say Harry Potter is a crappy asset to buy, or Game of Thrones is it. Like, these are high quality assets. So you can understand why he's excited for it, or at least is adamant around it. NVIDIA back to 183. Maybe that one goes green as the S&P very close to that 688 level. See if that ends up happening. Yeah, Friends plus Netflix. That's a big one. I think I started watching Friends back in 2015 because of Netflix. At least originally. I think what happened, well, so the deal's not going to close for a while. So, you know, if you have HBO Max, you can keep watching it. But I imagine it's just going to blend into Netflix, and you're going to pay one subscription for everything, and your account will just get moved over. 688 S&P. Okay, here we go. Maybe need $1.70 to make the move. $1.70 to make the move to all-time highs. Yeah, Harry Potter on Netflix is a big deal. It would increase the sub account, correct? Because they would be getting, well, look, if you're overlapped, yeah, then it wouldn't increase the sub count, right? Because if you have both subscribers, both subscriptions, it wouldn't matter. But for those that are exclusively on Warner Brothers, that would be a big deal. Palantir, make a little breakout, 181.35. I don't think Mr. Burry is happy with what he's seeing. By the way, yesterday he clarified his iconic tweet about selling. So remember when he tweeted sell in January? So he tweeted sell, and then he put another screenshot saying the crisis could resolve very quickly. I am not seeing true danger here. This was during the banking crisis of Silicon Valley Bank back in March. And then he said, I was wrong to say sell. So Burry is trying to put an end to this meme because everyone keeps responding with like, bro, you told everybody to sell before the biggest bull market in history. And he's trying to clarify by saying, I corrected myself within 2 months. I think the guy's losing it, bro. I think the guy's actually kind of losing. Dude, Twitter in social media, you have to really protect your mental when you're dealing with thousands and thousands of comments and opinions every single day coming at you. And it's not the easiest thing to necessarily navigate. This guy has not been in the public for 15 years. And then out of nowhere, he thinks he's just going to be able to handle millions of comments and responses every single day. A lot of them that are not going to be positive. And there's definitely people that agree with Burry's Isle of the Camp in terms of viewing AI. And those are the people that subscribe to his newsletter and probably, you know, send him a lot of positivity on the work that he's doing. But there's a lot of other people that are trying to make sure they protect their bags because they're loaded up with a lot of these stocks that he's saying are all going to collapse. They're not going to be sending him the friendliest messages. And as a human being, like forget as an investor, as a human being able to deal with all that, you can lose your shit. Like at the end of the day, he's a human that has to deal with all these people saying these things. So even the fact that he had to address that the meme has been corrected and kind of remind people that he said that he was wrong to say sell 2 months later, like the fact that you have to defend yourself means that it's getting to you. The comments are getting to you, and it happens. The comments get to me sometimes as well, and you like, you know, you want to give your perspective on it. But like, what happens when NVIDIA goes to 250? Like, what is he going to be saying about all these Substacks that said NVIDIA is the next Cisco? Now, granted, you know, maybe NVIDIA doesn't get to 250 one day, but based on the conversation I had with NVIDIA and Palantir yesterday and just how bullish they were on the data center build out, the ecosystem, all this. I mean, like, you trust Burry or you trust the people that are actually building this stuff? I mean, what happens to his mental health over the next coming years when everyone is spamming him with, hey, you told us to sell Palantir, and like, look, now he's got to be right to be the guy who's on the island who's seen as like the champion that predicted everything, just like he was in 2008. But this is a really tall order to be right on. And if it doesn't happen, because he's human at the end of the day, and he might be wrong about this, I wonder how he's going to navigate that as a public persona. Because in 2005, he wasn't a public persona. No one even knew him. They knew him after they knew him after he was right. If he was wrong, no one would have known about it. Now that you have a brand and you're publicly wrong on an epic level, it's a different mentality. Chell says you can't care what people think. Oh, trust me. Like, you have to have a thick skin as a creator of any sense. But at some level, you are a human being. And the fact that he even tweeted that yesterday, to me, shows that it's starting to get to him, because he's probably annoyed that people keep tweeting that sell tweet screenshot at him. And he probably wants to clarify. But the fact that you even need to clarify or say, and by the way, that doesn't make it that much better that 2 months later you say you were wrong to sell, because you didn't go long. That was only in March of 2023. You could have gone long and rode up one of the best 2-year bull markets at this point, 3-year bull markets we've had. He did not do that. So it's not like he pivoted. He's just trying to defend himself from all the trolls, which means it's probably getting to him. Meta right there at 670. That's up 1.3. That's making a move. Amazon back above 230. Palantir again at 180. NVIDIA cannot break through 183.50, unfortunately. 182.99. Hoodie also going red on the day. Hoodie's had a great week, though. I mean, a massive week for Hood. So that one closing above 130, that would be nice. And then S&P is at the high of days. 689 would be amazing. But it's at 688.22. 688.22 on the S&P. Doug says Burry was right on his blog for a long time before he quit medicine to start Scion Capital. That's fair. He was. And then it ended up resulting in this housing crisis, right? It's going to have to be this. Like, ultimately, all will be forgiven and he will get all the respect in the world if he's right that AI is a bubble and everything collapses. But that has to happen. And if it doesn't, it's just going to be tough navigating that. S&P is still moving. She's not stopping. Meta's also running. Meta 670, dude. Look at that. 671. I mean, dude, it was at 687 yesterday after it took a little bit of a haircut. So if this one can get anywhere near back to those levels, that would be pretty exciting. Let's get a little bit more updates on this consumer spending, and then we'll keep going from there.
And depending on what happens with Cook, that's also going to change things. So I think we should be ready for the unexpected when it comes to rate expectations next year. I totally agree that we're going to get some tailwinds from policy next year in terms of the tax refunds stimulating consumer spending. But then what does the Fed do if the economy is running hot? Even if the labor market's soft, if the economy broadly, if consumers are spending, if you have this tailwind, like you said, if you had a jobless expansion, it could happen. It's rare. The last one was in 2001, and it got solved through Fed cuts, and then we had a huge rally in stocks. Will it happen again? I don't know.
Do you take any message from the fact that Kevin Hassett has been the odds-on favorite recently in the betting markets and based on the reporting, and the markets have been pretty placid about it?
I mean, we have seen the long end slightly higher, and we have seen a steeper curve. And generally, I think that would be the direction of reaction if he were actually named. If that becomes reality, that could be really good for bank stocks, financials. It's not necessarily bad for equities in the short run. It could be quite good because, again, economy running hot. In the medium long term, it's just going to depend if he acts independently or not. If he does, and there's no reason why he wouldn't, I think we're great. We're in great shape. If there are questions about his credibility and his decision-making process, I think you're going to have gold higher, dollar lower, much steeper curve, and higher inflation expectations.
What would that look like? Because, people say this, but presidents always appoint Fed chairs, right? It's always a decision from the president. And yes, this president has been more outspoken about what he wants on policy, but all presidents want lower interest rates.
Correct.
So what exactly do you think would spook the market about Kevin Hassett and sort of teeter into that blurry line of independence?
Hassett himself doesn't worry me. I mean, he's a PhD economist. Right. He's incredibly experienced. I think the Lisa Cook decision, that's a much bigger catalyst. If for cause allows her to be removed before the regular reconfirmations of the Fed presidents in late February, and even if they aren't affected, if there's noise around those reconfirmations, I think that could erode perceptions of Fed independence and could lead to more term premium in the bond yield, which pushes up yields overall. So we have higher mortgage rates, higher auto loan costs, higher corporate borrowing costs. I think that would not be good for the stock market.
And that, again, is based on how the Fed is perceived as independent, but it doesn't seem like Hassett in general would be perceived as the least independent. I mean, even if he is, as she said, the Lisa Cook stuff is more so I think what'll trigger the markets versus like the president picking his own Fed chair. Pounds right there at 180. S&P, she's really trying. It looks like she wants all-time highs. If we can get NVIDIA to 184-ish, I think it could happen. Meta right there at 672. QXO, Steve is big on this one, trying to get up to $21 today. Salesforce up 5%. Adobe up 5%. All the software names are heating up. Wow, look at the heat map. Pretty much everything green except Pepsi, GE, AbbVie, a couple healthcare names, UNH. Apple, NVIDIA, obviously slightly red, but everything else having a pretty strong day. Let's look at the stock draft. We haven't looked at this over the past couple of days. All right, your boy's still in first place at 32%. Matt's at 26. Tanner's at 22. Steve's at 4. Chris is at 9. So for Matt, I think Dutch Bros is hurting him the most. For me, obviously, it's Duolingo. Duolingo back to, dude, Duolingo's almost back to 200. Hold on. Can we get Duolingo to make a move? 196. This thing dropped to what? 150? 160? 165? Maybe getting a little bit of love right here. Even SoFi also. Yeah, look at SoFi. It was down 9. Now it's down 5. So again, we'll be live on the close at 5:15. We will get all the details. Netflix, by the way, going green as well on the S&P inclusion. And SoFi could be included here. Yeah, we might do something for New Year's Eve with like a different little stock draft. So we'll think of something. And for all the people that stay home on New Year's Eve, we'll see what we can do. Tim, thank you. Number 2 YouTube channel for 2025 is Amit, and number 3 is Tanner. Me and Tanner have been having so much fun on this thing because like some people tag me and I'm ahead of Tanner. Some people tag Tanner and he's ahead of me. It's ironic because Tanner is my number 1 channel. So it's like for all the people that are tagging with me above him, the funniest thing about this is that he's my number 1. I was like, I don't think I watch Tanner that much, but I guess I do. I guess this guy's in my rotation somehow. Tanner says, only if I pick SoFi in place of... Dude, Tanner, we're still... I still can't believe you didn't take SoFi here. Because it was up for grabs. And I'm just saying, loyalty is a thing. I took Palantir and Hood, and at the time, both were seen as like ridiculous picks, given they had still run like crazy. SoFi hadn't even run that much. Where did Matt get it at? Matt got it at $14.90. He took your SoFi. ServiceNow was Tanner's 3rd pick, down 14. Yeah, SoFi definitely would have put him ahead right there. But 22%, this one, TTD is the one that's hurting him the most. Melly's hurting. Melly, I think, will resolve itself by next year. ServiceNow, I just don't know enough about. TTD is just, you know, they might have a fundamental issue. Just like for me, Duolingo, unfortunately, might have a fundamental issue here. For Steve, he just has a bunch of stinkers. I mean, Lex, PayPal, dud. MicroStrategy, dud. Hims, dud. I almost traded Apple for Hims. And he said no. And I was like, all right, I'm keeping Apple. And Apple is up like 40%. And then Netflix, unfortunately, dud. Salesforce finally recovering. And then Micron, he's at a good one at 96%. Tanner says, I didn't think anyone would take it. It's not about that, bro. I didn't think anyone was taking Palantir and Hood. Hood was 70 at the time. Palantir was 140. Because it was Steve was not taking it. Chris was not taking it. I knew Tanner wouldn't take those. Maybe Matt would have taken Palantir. But then again, I still think Matt would have been a little hesitant. But I didn't even want to risk it. I didn't even want to. I was like, nope, these two are coming home with me. And then you guys let me get Tesla. No one took Tesla. They let me get Tesla at 329. I was like, okay. Give me Palantir, Hood, and Tesla. 688 on the S&P, still not breaking through 688.50. But trying to hold on. Hoodie 133, Palantir 180. All right, so let's see if we have any other headlines macro-wise. The big thing of the day was PCE. SoftBank, we have some headlines from them this morning. Dude, there's this weird headline. First of all, they're thinking of buying a stake in Digital Bridge, which I believe is a public company. Another thing they're trying to do is build these like AI pseudo data centers, industrial parks that are with Trump. Let me play this real quick and see this headline.
Reportedly wants to help the Trump administration build out American manufacturing capacity. The Wall Street Journal says that SoftBank CEO Masasan is working on a plan under which SoftBank would help create factory clusters in the United States using hundreds of billions of dollars pledged by the Japanese government in its recent trade deal with America. That report says that Trump-branded industrial parks would be built on federal land and owned by the U.S. government once they're complete. The goal would be for them to produce data center equipment and eventually AI chips. The Wall Street Journal says that President Trump has indicated that he's on board with Masasan's proposal. Andrew?
Thanks, Bex.
So an industrial park is a planned area of land zoned specifically for factories, warehouses, and other businesses, providing shared infrastructure like roads and waste management to centralize industry and boost local economy. I mean, again, this administration has become so friendly and conducive to the idea of making sure the manufacturing of data centers is a real thing. And this is another reason it's hard to be bearish NVIDIA or just be bearish AI. Like, this admin is so aligned with making this happen, making this real. And, you know, that results in jobs, productivity, efficiency, obviously asset prices to do better if those companies can get compute online, but they are very geared to making this happen. And so it looks like Masa might get into this as well. Yes, Tanner, join us into the stream as well. I'll send you the link. And Tanner, you have to join the stream. I mean, if Sofi actually gets in, everyone is going to be wanting to hear from you. So I'll send you the link, and whenever you pop in, then we will we'll see if Sofi ends up making it. Okay, Google. So the Google DeepMind head just did an interview, and here is him talking about where their vision is for Gemini. Let's play this real quick as Google sustains above 320 here.
On the Axios stage, what would you say a year from now? How will agents have progressed? What's an example of how it will work in everyday life a year from now?
Well, look, we have this concept of a universal assistant that we want Gemini eventually to become. I think this is also, you're going to see from us over the next year, this will be on more devices as well. By universal, we mean it's not just on your computer or your laptop or your phone, but maybe it comes around with you on glasses or other devices. And I think it needs, you know, we want to create something that is useful to you in your everyday life, that you consult many times a day. It becomes a part of the fabric of your life, and it just improves your productivity, but also your personal life, you know, recommendations for books and films and other or activities that you'd like. But agents at the moment, you can't delegate to them a whole task and be sure they're going to complete that entire task completely reliably.
But a year from now, you think they will?
I think a year from now, we'll start having agents that are close to doing that.
And bull case, bear case. What is the best case for what AI can do for the world, and what do you fear most?
Well, look, the best case scenario that I've always dreamed about, and why I worked my whole life on AI, and you know, getting closer to this moment we've been working towards for decades now, many of us, is a kind of, I've sometimes called it radical abundance. So this idea of we solved a lot of the biggest issues confronting society and humanity today. So whether that's free, renewable, clean energy, maybe we solve fusion, or better optimal batteries and solar materials, semiconductors, you know, material science. We've solved a lot of diseases. So then we're in a situation where, you know, we're in this new era, post-scarcity era, and we're potentially, you know, humanity is flourishing and traveling to the stars and spreading consciousness to the galaxy.
And what do you?
This was Sundar's argument as well on Fox yesterday about the idea of I mean, data centers in space. You're just seeing a lot of excitement from where the heads of these AI companies are thinking about when it comes to incorporating these data centers. Again, the big announcement yesterday as well, for those that missed it, was Palantir and NVIDIA announcing Chain Reaction. This is Palantir's new product offering. NVIDIA is a founding partner in this offering. I got to speak to a lot of employees yesterday around what this partnership looks like, and one of them in particular just really explained it deeply. And at its core, they're talking about an operating system specifically to handle complex supply chains and energy problems that come up with data centers. And again, the really cool thing about this is Warp Speed was basically bringing the ontology and foundry to the defense space and reindustrializing defense manufacturing. Chain Reaction is saying, hey, let's take the same benefits of this AI operating system that we've built over the past 20 years and bring it to something that is at the intersection of how to make AI even real, which is chips and making them come online. I think the biggest bottleneck that Jensen's been talking about a lot more, and Nadella, is energy. Palantir has a lot of experience with dealing with energy infrastructure. PG&E was one of the big ones that the OGs remember, especially with dealing with wildfires. So I think that is going to be, I think it's going to be one of those partnerships where if data center growth continue, like if you believe in Nebius and CoreWeave and all these, like you need software to make sense of building the data centers. And that's where I think that partnership can be very, very creative. Here's the update on the White House being skeptical potentially of this Netflix deal. A lot of reports that said the White House wanted Paramount to get it based on the Larry Ellison ties, but it seems like Netflix has won the bid.
Ellison's father talked a bit about that too.
Yeah, Carl, we're getting some news here. Our first reaction now from the administration. I was just in contact moments ago with a senior administration official who tells me that the administration's view of this deal can be characterized as heavy skepticism. So no word from the president yet. We'll watch Truth Social, but that word from a senior administration official to me just moments ago saying they view this deal with heavy skepticism. I think that's what we could have expected from this deal. You know, the general view at the White House of Netflix is, you know, sort of it's an Obama entity because of that deal that they did with the Obama family. They wanted the Ellisons to.
What? The general view of the White House is that Netflix is an Obama entity because they did a deal with what?
Expected from this deal. You know, the general view at the White House of Netflix is, you know, sort of it's an Obama entity because of that deal that they did with the Obama family. They wanted the Ellisons to be involved here. That's not.
I'm just hoping that's horrible reporting, not the truth, because that is very weird.
Contemplated under the current deal structure. So I think we can start to expect some potential opposition from the administration. How that shakes out, though, is not necessarily clear. Let me run through real quick, Carl, the antitrust process here, and you'll just see why the deck is a little bit stacked in favor of the administration here. The first thing that has to happen is what they call an HSR filing. That means that the entities that are engaged in this deal have to file a Hart-Scott-Rodino filing laying out the deal to the Department of Justice. That is expected to be the very first sort of piece of paper here. And then there's a process that has to run. There's a 30-day initial review to get to a decision about what they call extended review. It's almost guaranteed in this case that you would have an extended review by the Department of Justice. So to slow this deal down, what sort of experts in Washington are saying is all the Trump administration really has to do is sit on its hands as it evaluates that and conducts the extended review, gets documents, gets internal information, market share, all of that will be gathered over the course of maybe a year. So this becomes a very extended process internally at the Department of Justice. Externally, you know, this is going to be a massive clash of clans. It's going to be a big political battle between all of the different sides here. You've got traditional old Hollywood that doesn't like this deal. You've got the Ellisons out there deciding what they want to do. You've got the Trump administration deciding how they want to play it. But you've also got actors. You've got state attorney generals who are going to look at this from a consumer perspective. So there's a lot of clans out there. And right now, everybody in Washington is trying to figure out who is on what side of that line. How do we build coalitions with the other people that we might not see eye to eye with ideologically, who end up on our side of the line to fight this thing? So this is going to be a long and intense battle. But the first thing you're going to see is that HSR filing.
Eamon, when you were saying the heavy skepticism, I mean, I'm sure it's not lost on the administration that the co-founder of Netflix, Reed Hastings, has been very anti-Trump, has put a lot of money where his mouth is, most recently backed Governor Newsom in the redistricting to redraw the House maps and in the sort of Stop Trump movement.
That would be, okay, that one makes more sense than the Obama thing. The Obama thing was just weird. But yes, Reed Hastings, founder of Netflix, very anti-Trump. I don't know if that necessarily stops the deal, but maybe that influences how Trump thinks of giving them this acquisition.
That has to play a role, even if it's not supposed to.
Yeah, and you just heard Treasury Secretary Bessent, on stage with our Andrew Ross Sorkin at the DealBook conference, invoked the Netflix deal with the Obamas on stage to sort of mock the sort of politicization of some of these networks, right? So Netflix is not favorably viewed within this administration. And as you say, I'm now being told by a senior administration official, the first blush reaction that we are getting is heavy skepticism. So how does that materialize? I think in the Department of Justice antitrust process. But I think if President Trump, wants to flex here, and he often does, there are a whole host of other elements of executive power that he could bring to bear in a way that we just typically wouldn't see in a normal administration, to put quote marks around the word normal there. This president, is a maximalist in terms of his interpretation of executive power. And I think
the question,
use all that.
The question, David, would be whether or not that scenario clouds this view in corporate boardrooms that we somehow have entered a new reign of M&A nirvana where deals are allowed. I mean, I guess in this case, though, unless some of your political past runs afoul of certain people in the White House.
Yeah, listen, Carl, when we've been, as long as this auction's been going on, we've been having the conversation at the desk about how different this is, because it's really a one man and conceivably what he wants in particular. And that's no different here. I think the things that were raised just now, the timeline raised by Eamon is appropriate.
Look, if it doesn't happen, Netflix is out of $6 billion. So I don't know what the Trump administration is going to do here. It's probably going to take a while to figure out. Netflix green on the day right now, 103. But if the deal doesn't go through, that's $6 billion down the toilet. So I guess we're going to see. I think this is going to take a while, though. So for those that are kind of getting into Netflix just for this, I don't think there's any resolution. I mean, this thing could go back down below 100. It could go up to 110. Could be stuck in this. Like, if anything, it might end up creating an overhang for the stock for the next year. I mean, that's another perspective to think about it, because if this is constantly over the narrative of the stock, is like, will they acquire? And this is not just like some rinky-dinky little acquisition. This is like changes the entire trajectory of the company. So it is something to think about if this is a 2026 narrative that Netflix has to deal with the whole time. I kind of still think the deal goes through, though. Do you really think Trump is going to cancel it because he thinks Netflix is tight with the Obamas and that Reed Hastings likes Gavin Newsom? Duolingo, by the way, just hitting 200. Like, do we really think the administration just says, nope, we're not going to let it happen because of that? I mean, maybe. That's a good poll question. Let's do that. That'll be our last poll of the day, and then we'll be done. Let's ask that question. Other than that, guys, nothing else crazy happening in the markets. PCE was the big news. We got done with that. S&P, I'll be live after the close is there, but besides that, nothing else too crazy. Would Trump block the Netflix deal? He doesn't get to literally make that executive decision, but as Eamon was saying, there's a lot of different things they can do to just stall it from happening or make it tough to get it to go through, which would give them more time to think of different ideas and concepts of it taking place. I just don't know if he would really put that much energy into not making this happen. Like, he could direct the FTC to investigate. I mean, I think that's the biggest thing Trump could do. He could just tell the FTC to like shut it down and like work really hard to make sure it's not seen as a meaningful deal. S&P right there, 687.80, not really getting to that all-time high yet. We're going to see if this can end up bouncing towards 690. NVIDIA is just stuck, bro. Every time it gets a little bit of momentum, gets stuck. We haven't had that breakout since the earnings, and then it got dumped the day after earnings. but I'm not complaining at 180. I mean, this was my price target for the year. 180 was actually, now that the EPS growth is just so much higher, I'm like, 195 should be closer to where it should be. They got Palantir back to 180. Amcor holding on to the 43s. Tesla trying to get back to 460 right here, which is very nice to see Tesla holding on to that level. And with all the shit we went through in November, the S&P is less than $2 away from all-time highs. This is why it's hard to sell, bro. It's like selling is not like, we're talking about sell. I mean, how many people were saying, get out of the markets, it's done, we're cooked, sell everything. It sounds smart to say that stuff, but it's not easy. Like, and as bad as it felt 2 weeks ago where you really wanted to just like get out and say, I'm done with this game. When do you get back in? You don't know, because once you get out, it's hard to get back in, especially if you bought these stocks months ago. And that's why the perma bull thesis is not even like, oh, you're always bullish. It's just like you have no other option unless you're like an expert at timing the markets and day trading to be bullish. Like, yeah, you might not have to deploy capital all the time on dips. So you can make strategic decisions, but long term, what other choice do you have other than believing that the American economy will thrive and that you might not have the best way to time it, so that you've got to be in the economy to participate in the upside of it? It's not the easiest. Is not the easiest. Yes, after the close, S&P will be rebouncing. What companies, does anyone have the list? Let me see. What companies are eligible for S&P 500? We know Sofi, we know Reddit. But I don't see what other companies are out there as well. There's a couple energy companies that didn't make it last time that could get it. Last time it was AppLovin and Hood, and then another company that I think we all forgot about because no one cared. Other than AppLovin and Hood. Figma can't get in. They just went public. Dude, MicroStrategy is not getting in. I'm sorry, but MicroStrategy is not getting in. Like, I'll eat my words if I'm wrong here, but I don't know if the committee is going to easily want this Bitcoin treasury to be part of it. Like, eventually they probably have to get in, but I think that's when like Bitcoin really goes up and the committee is a little bit more I guess like warm to the idea of it. When Bitcoin's as volatile as it is, I don't know if they easily say, yeah, let's throw it in there. I mean, they already have some crypto companies, including Coinbase, in there. 687 on the S&P. Okay, here's the list. SoFi, Reddit, Vive. Oh, Vive could have gotten last time. Pure Storage, Zoom. Zoom's eligible. Okay. A-Lab, that would be a big one. MicroStrategy, obviously. VRT, that would also be a big one. And then Affirm, which would also be a big one too. I say this as my camera has officially died. All right, so that is it for me. Let's do word of the day, and then we'll be out of here. I'll be back on the close. We'll have Steve join me. We'll have Tanner join right before the announcement. 5:15 p.m. Eastern is when the announcement will come out. So please just remember that is the time. If you only want to show up for the announcement, you can show up at like 5:10, and we should get the numbers literally at 5:15. All right, word of the day is Cantillon. Refers to the idea that newly created money benefits those who receive it first before prices adjust, meaning monetary expansion has distributional consequences, not just inflationary ones. I think this is actually a good word going into next week. When the Fed injects liquidity, the Cantillon effect kicks in. Asset holders get the upside long before wage earners feel anything. Wow. That's a hell of a word. That is, I think we'll actually use that. I mean, we've been talking about something like that for a while. So new money creates benefits to those who receive it first before prices adjust, creating distributional consequences, which is a Cantillon effect. I mean, yeah, if the Fed injects liquidity, stocks go up before the average American would feel the benefits of that liquidity, which is the benefit of being an asset holder. All right, that's what we got. That's the word of the day. Thank you, everybody, for being here. David, thank you for the super chat. Silver is at an all-time high. Congratulations to those that are in silver. I will be back on the close. We're going to see how this ends up playing out. But I mean, look, overall, it's a good week. I don't think any of us can be upset about this week. S&P 500 so far for the week is up 1.25% to start off December. December averages 1.5% for the month. So the fact that it's up 1% in the past 5 days is bullish. That also means we have to be a little cautious going into next week. But if we can break through that all-time high, get the Fed cuts, earnings continue to be strong. We have a bunch of earnings next week. And this consumer is weak narrative is challenged, then maybe that really does continue into some more excitement and momentum. Check pronunciation. Dude, there's no way I said it wrong. It's Cantillon. I'm pretty sure you guys said it the same way I did. Cantillon. All right. Why do I not see it? Okay, here it is. Does it spell the same? C-A-N-T-I. Okay. All right. I'm saying Cantillon. This shit better not be wrong.
Cantillon.
Dude, no one saw this word and said Cantillon. No, absolutely no one saw this and said Cantillon. It's like, in what world did you see that and say Cantillon? It's Cantillon. Although now that I'm looking at the spelling, it should be L-L-I-O-N for the eon sound. This is actually more like a 3-syllable word that ends in on versus eon. But still.
Cantillon.
Apparently another definition is it's a brewery. Okay, whatever. I'm going to keep saying Cantillon. I'm going to keep saying Cantillon. Cantillon sounds better than Cantillon, dude. Cantillon sounds like some, I don't know, some like crappy like cigarette brand. Cantillon sounds like a finance word. It's like, oh, did you look at the Cantillon from the Fed? That just sounds better. All right, that's it for me. Thank you, everybody. Appreciate you all. I will see you guys on the market close. We'll have S&P inclusion, and we'll keep seeing if the S&P can break through these all-time highs. Bye, everybody. See you guys on the close.